Hey guys, if you could hear me and if you are in the room, go ahead and type something in there so I could see that you are here. And we're gonna get started in about 3 minutes, okay? 7:05. But I want you to go ahead and type something. I believe that the group chat over here should work. And that way, if any of you have questions, you can just type it on the right. All right, just give it a couple minutes, okay? 3 more minutes. All right, guys, welcome to this webinar. This is Deneng, and what I'd like to do today is go over some of really cool stuff with you guys. And I just want to let you guys know that the trades I'm going to go over, they've been making a huge difference to my trading. I've been able to pick up a lot of pips, a lot of wins from these trades, and I think also at the same time. Many people, they get into the trading arena and they think that they can't do it because it's too time consuming, or they don't have the time to sit and watch the charts all day long. And so I do understand that, however, it's not true. You can actually still trade even if you have a full-time job. And I will be going over that because I think you can actually just place a couple trades and go about your day and not have to sit and watch the charts all day long. And I'm going to show you how to do that tonight, okay? I think it's going to be very beneficial for many of you who still do have full-time jobs. And so, yeah. So just want to quickly kind of go over some of the trades that I've taken. These are the zone trades. And so basically there's only four strategies that I use when it comes to trading. And let me pull up my thing here so I could write down some notes here. So everybody has their own different styles of trading, and you know, not one is better than the other. You have to just figure out which way is going to fit you the most. And so, you know, one trader is not going to trade exactly like another trader, but how to find these trades and knowing some of the basics, all those are the same. Okay. So for me, what I focus on is that I focus on trend trading. I focus on divergence and zone trades. And then we also have the harmonic scanner trades. So these are the four strategies that I use when it comes to trading, okay? And today, the trades that I'm going to be focusing on training you guys on is the zone trades, because zone trades make a lot of sense, like I said, because for many people, maybe you might still have a full-time job and you don't have the time or the luxury to sit and watch the charts all day long. So you should know this so that you can still put in some trades while you can go about your day and you know, do your work and stuff, and still be able to have your trade run in the background. Okay. And so this right here is one of the zone trades that I took. It's for the odd NZD. And basically for this zone trade, you know, I had this little area mapped out, and you know, I put two positions on here. One position, I closed it out right here and made 21 pips. The other position, I closed it out a little bit over here with 25 pips. And of course, you know, you're looking at this charts, this is after the fact, but you know, if you have held on to this, you took a little bit of drawdown, and then yes, you know, there was this huge spike up here, and you know, and things like that happen, but you don't know that that's going to happen, right? And seeing stuff like this, it really doesn't bother me. It used to, you know, I used to think, oh, darn it, you know, I could have like held on and got more, right? But it really doesn't matter to me. As a matter of fact, my pip goal per day is actually only 50, you know? So if I can get 50 pips per day, you know, I'm pretty happy. And a lot of the times I usually trade at about 0.50 lot or even a standard lot. And so, you know, you could do the math for 50 pips, you know, that's about $200 to $500 a day. And that's good enough for me for right now. So the important thing is, you know, just slowly build your account. You know, don't try to like, you know, just because you're on a winning streak, don't try to like keep on getting more. You know, and that's the greed factor setting in, and that's how you lose. So just kind of keep that in mind. So this is the for the odd. I can't see this. This little thing is blocking it. But for this zone trade, I caught 15 pips there, and then 31 pips there. And then for the CAD CHF, I also put 2 entries on here. I closed this one at 14 pips. This one caught about 29 pips. Okay. So these are some of the trades I've taken just in the last couple days. And then there's this one also from last week. And so for tonight, what I'm going to do is I'm going to walk you through on how to find these zones. Okay. And so this one right here, yeah, so this is actually, let me see here, I think this is, Let me check here. That's the GBP, NZD. Okay. So that's this one right here. Okay. So basically this zone right here, how I found this zone is, first of all, the thing that you have to do is you have to trade with the trend, okay? And when you're trading with the trend, you want to trade with the 4-hour and also the day chart trend. And so for many of you who are new, if you are totally new to trading, then just kind of bear with me. I'm gonna make this as simple as possible. And as a matter of fact, quite honestly, trading is actually not that hard. The technical aspects of it is actually pretty easy. You could get this down fairly easy. And you know, the hard part about trading is actually the psychological parts of it, and the inner self-discipline that we have to have, you know, having more patience and being disciplined and waiting for setups to occur before we take it, or like not holding on to trades too long. That's the greed factor setting in, or being afraid to take trades when you're supposed to because it's already in your zone. Okay, so you know, we are imperfect beings, and so we have to work on those things, and that makes up for like a lot of the failures when it comes to trading. However, when it comes to the technical stuff, it's pretty simple, and you'll see when I go through this. Okay, so don't let these charts like don't let these charts discourage you from, you know, from trading. And because you know what, these charts have discouraged me from trading for a very long time. My background, I used to work in a brokerage firm as a stockbroker, and you know, although I dealt with traders and I helped traders, and I've seen day traders and I helped them place trades, but I've never traded myself because I've always thought that, you know, technical analysis was just too technical for me, right? And so I never got involved with it. And you know, that was a long time ago when I was like around maybe 24 years old. And but I've always kind of had this interest in it. And so finally, now that, you know, I've actually got involved and really dive into it, I'm like looking back at this stuff, and I'm like, geez, I could have done this like 20 years ago, you know? Um, but so, you know, don't let the charts discourage you, and you know, don't let the technical aspects of it discourage you, because that's actually the most simple part when it comes to trading. Okay, so with this one right here, GBP NZD, okay, so as you can see, I caught 51 pips right here, okay, because it went into my zone. I placed my sell, and I closed it out right there. Okay, so how this works is, first of all, you got to identify the trend. Okay, so where's my little sheet again? You got to trade with the trend, and then you map out your zones for reversals, and then you set alerts. Just those three things. Okay, so first of all, let's talk about trading with a trend. So if you go here, this is my 15-minute chart, but what you want to do is you go to the 4-hour chart. Okay, when you get to the 4-hour chart, you see something like this. And you can draw your trend line if you want. You don't have to. But basically, that just helps me identify and know that, you know what, this is a downtrend, okay, on the 4-hour chart. If I go to the day chart, it's also going down, okay? So I know that this is a downtrend. Another thing that you can do, and because I know that it's a downtrend, then it's smart to only do shorts on this, okay? And so don't try to buy, just go short. And so what you want to do is wait for price to get up to an area of reversal, and what you want to do is place a sell there when it gets to that zone. And another indicator that's kind of cool that I use is that identifies trend is this. Let me see here. So I use this indicator right here. It measures the strength of the trend. Okay, so the red means bullish, the green means, the red means bearish, the green means bullish. Okay, so I know that, if I go over to the 4-hour chart, so remember, you're going to use the 4-hour chart. I see this right here. You see this heavy red right here? It's trending pretty heavily down south. Okay, so you're going to be smart if you went short on the GBP NZD or practically any GBP pairs at the moment, because they've all been kind of trending south. Okay, so I know that the only position I'm going to take on this pair is going to be shorts. Now on the 4-hour chart, after I find this out, I don't like to leave that there. I just kind of take it out. And then I can see that, okay, so these areas right here, okay, I mapped it out right here because these areas right here is where, this area right here is where price is touching. Now, when I mapped out this zone, price was just right around down here somewhere, okay? But I put that right there at the top of those wicks, okay? And then once when I do that, I go over to the 15-minute chart. And then you could kind of see, okay, that, okay, so it's touching this, touching here, and there's this huge drop here. But this area looks pretty good. Price came down, kind of touched right there, and also right there, okay? So this up here, right here is resistance, right here, down here is support, okay? Price, once when it hits the resistance, it'll bounce back down, okay? And basically that's exactly what it did. And so when I placed my sell order, I caught it right there, and it kind of went around here, stayed in the zone, and then finally it dropped. Okay, so that's that one. Now a more recent trade that I took was the CAD JPY, and this was actually a signal that I sent to a couple people. And so there's a lot going on in this trade, and I'll explain to you what this is. It's a little bit messy here. Let me see if I could find my my ideas. Where's all my ideas at? Hold on. Published ideas. And what I use is the trading view, and it is a free website. You can go on there and do your graphs. There is also a paid version, which is the pro, and I have the pro because there's a couple more features that I want. But if you're just starting off, just the regular free version works just fine. So here. So, and you can publish your ideas, okay? Like if you think a currency is going to go a certain way, you can publish it. And then basically the cool thing about it is that TradingView will keep it the way that it is. And, and then that way you can come back to it and see if it actually went the way that you say it would, okay? So basically for this pair right here, I saw that it was coming into my zone, okay? This is my mapped out zone. And as it came into the zone, it also formed something called divergence. And basically what divergence is that when price comes down, it goes back up and it comes back down again, making a lower low. But if you look at the histogram, and you can use anything, RSI to a MACD, this is the MACD, and you see that the histogram disagrees. Price is making a lower low, but the histogram is making a higher low, okay? And so there's an open space there, So this indicates that price is going to go back up. And there's a reason behind this too, and it has to do with the big banks and how they manipulate the market, how they try to take out people's stops and things like that, in which I'm not really going to go too much into. But you just have to understand that Forex is a $5.3 trillion per day market. However, only 25% of that are retail traders. 75% of the money that's flowing into the market is from commercial. It's from the big banks, the hedge funds, and other institutions. Okay, so it only makes sense that you want to trade along with these big guys. Okay, I mean, you could be $1 million trader with your $1 million account, trading maybe 10, 20 contracts or 10, 20 standard lots per time, but that's not even going to do anything to the market. What moves the market is when these big banks come in with 50,000 standard lots or like 100,000 contracts and things like that. Okay, and so that's kind of like the game that's being played in the Forex world. Price moves down, it's already hitting some type of support here. However, when people buy right here, it starts to go up, right? When it goes up, they tend to move their stop right to where their entry is. And so what happens is these big banks, they play their little game and they push the price all the way down. Okay, when they push the price all the way down, and then they take it back up, and that's when they make their move. Okay, and so that's how they get people to take out their stops and stuff like that. And so this happens all the time. And so what you want to do is just recognize that. And so Divergence is really cool, but I'm gonna have a separate training just on Divergence itself, and we'll go over more into that. But basically, so you see, Divergence is showing, and I put my stop down here. This is my entry right here, TP2. There was a TP1 that I put right here, and then this is a 4-hour chart support, which is pretty strong. Okay, and then you can also see that this is a 4-hour bullish trend, so it's trending up. So I'm not gonna do a sell. All I'm waiting for is for price to hit some type of support and do a buy. Okay, so this is what happened. This is how it all played out. Once you click on that little button, it shows you what happened. And so price went up right here. It would have hit or pretty close to the TP1 area right here before it dropped back down. But the thing about it is that when it dropped back down, it also created another divergence. And then it went all the way up and hit the TP2 before it dropped back down. Okay. So that was a more recent trade. That was a trade just this morning, pretty much, that I took. So that's how you find these areas. You got to just look for the support areas, the strong support or strong resistance areas. And so for instance, this one right here is actually a trade that is in progress right now. Okay, so if you take a look right here, okay, this is the odd USD. Basically, this area right here is mapped out, and you go to the 4-hour chart. You notice right here, right? Okay, so I have this marked right there. And the reason is because you look at all these little touches, right? You got touch there, touch there. Okay, so here we go. Now, this is happening in real time. This is actually an alarm that is going off, and I'm going to talk about this alarm, okay? So price is hitting where I want it to hit, okay? So we're going to go here. Oops. I go back up to the 15-minute chart, okay? And so basically, I'll show you how to set this alarm in just a minute here, but when price gets down to this area, it's a good chance that it's going to reverse. And as a matter of fact, if you see this right here, price went down here, hit right here, and it started to go back up, right? Chances are this is going to probably come back down here, close to here, and then it'll go back up. And usually what you will want to do when price is falling, like a falling knife right here, you don't want to just go ahead and just take the trade because you don't know when it's going to stop. Okay, But when price is already going up, usually I like to take the trade after the bullish candle, like right here. Okay, so if I see a bullish candle going back up after it hits the zone, then that's where I'll take the trade. Unless this bullish candle is pretty big. So if I went here and I measured this up here, well, that's only about 7 pips, 6 pips, right? But if this bearish candle, if this bullish candle was any bigger than that, then what you will want to do, the best thing is actually just to wait for a retracement, okay? So, and you can do that just by, using Fibonacci, and pretty much you can measure, oops. So price hits here and it starts to go back up, okay? So when it goes back up, I'm gonna see where it's gonna retrace to, and most likely it's gonna go to the 61%, okay? So as you can see right here, it stopped over here, it's gonna come back down. At 61 right here, this is where I would place my buy order, okay? And anywhere between the 61 to the 70, 78 here, that's a good area to buy back in. That is if you have a strong bullish candle that's a little bit too high, and so you don't want to. Let's say when you got into the trade and this bullish candle is just a little bit too, it went up too far up, so you don't want to just go ahead and take the trade up. Just go ahead and wait and let price come back, because a lot of times it does. It comes back, retraces to the 61 to 78 or 79 area, and then that's where you can take the trade. Okay. All right. So this is another example, and then now I'm gonna go ahead and do like an example for you guys, like from scratch. Okay. So let me see here. Maybe I can pick this one. Okay. All right, so this is the Euro NZD. And so the first thing that we got to do, okay, so again, you want to go over to the 4-hour chart, take a look at that, and you know that, hey, this is definitely bearish, right? So you know this is definitely bearish, okay? It's going down. And then just check the day chart also, okay? Definitely bearish. And then you go over to the 15-minute chart, and that's where you, you go to the 4-hour chart to find areas where you can map out some zones, okay? So when you get to this area right here, you want to take a look at it, and most likely, I think, here we go. I like this area right here, okay? So why do I like it? Well, there's multiple touches. There's a touch right here. Price went down, bounced back up right here. Price went down, bounced back up. Price went down, bounced back up. Okay. Same thing here. Large candle, but there's multiple touches. There's 1, 2, 3, 4, 5. 5 touches right here. Okay. So in this area, maybe I can even go. Maybe I can even go right there. Okay. So basically one right there, be right there. Okay. So kind of like this area will be kind of like my zone. All right. So now that I have that, then I can go over to my 15-minute chart. And I know that, okay, so price is kind of messing around down here, but I don't care, right? I'm not going to do anything with it. I'm not going to try and buy this thing. Okay. This is trending south and it's trending pretty hard. All I'm going to do is I'm just going to wait for price to come back up, hit my zone, and then that's when I will sell it. Okay. So when it gets right there, I'm going to go right here, map out my zone area. Okay. And then this right here is where I set my alert. And the way you set your alert is you just do a left click. It says add alert on horizontal line. You click on that. And that's it. You click create. Watch up here, okay? You click create. And it's going to come right up here, okay? So if price ever comes up here and hits this area, I will get an alert on my phone that says, hey, price is crossing your zone. And then I will jump on the computer, take a look at it, and then I just place my sell order, and then I'm done. I don't have to sit on the here and watch the charts all day long, like some people think, okay? So this is really simple, guys. And you can do this for, you know, as many pairs as you want. I usually focus on 5 to 6 pairs per day, and just set some alerts, and that way I don't have to sit at the computer all day long. Okay, so it's real simple to do, but you do need to have this TradingView account, and again, it's free. Now, the way that you would set the alert, guys, to have it come to your phone. Let me do this. The way that you would set the alert to come to your phone is you go to where your profile is, go to profile settings. And then as you can see right down here, you will see the SMS email, okay? You want to put your phone number with whoever your email mobile carrier is. And if you don't know how to do that, you can click on email address, and it'll actually give you a list of all the mobile carriers and how you can do it as an email SMS. So for AT&T, all it is just your 10-digit number at tx.att.net, okay? And you know, pretty simple, okay? And so once when you have that, just put it right there and click on save. Then now you have it. So once when price hits this area right here, TradingView will actually send you a text message right on your phone saying it's hitting this area, and you go back and look at your charts and see that it's in there, and you know, look for signs of reversal and then take the trade. Okay. And so these trades, like I just showed you, have been awesome. These are in the high, I say high 80s to even 90 win rate. Okay. So there's very rarely do I lose 2 trades in a row. But you know, nothing's 100%. However, you know, this is what I call a high probable trade. And especially like the what was that, the CAD JPY trade that I just took, and so yeah, because that one was showing like a lot of stuff. You know, you got the divergence is trading with the trend and all that going for it. Okay, now why is trading with the trends so important? Okay, let's talk about that. Many people think that or you know, it's interesting, but let me just use this as an example, okay? Trading with the trend is important because let's say you were not trading with the trend, and let's say it went, let's say you placed a buy right here, okay? Let's say you saw that, price is headed up right there, and, hey, you see that, okay, well, you know what? There's something going on here, there's some, there's some touches right here, and there's some resistance area right here, right? And so you decide to do a buy, you decide to sell right here, okay? Not even thinking about this big trend on the 4-hour chart that is doing. So you place a sell order, it starts to drop, and then it starts to go up. And many people make the mistake that, that this is the pullback. Okay, so you made a sell order, it's pulling back. But in reality, this is actually going, I mean, you were trading the pullback, and now it's actually going with the trend. And, unfortunately, if you make that mistake and if you don't have a stop, it's gonna really mess up your account, okay? As you can see, when you're trading with the trend, the trend is your friend, but when you're not trading with the trend, you could really get hurt by this, okay? So it's important to identify that trend, especially on the 4-hour chart and the day chart, okay? So pretty much that's it, it's pretty simple. Does not take a lot of time. And what I would do is up on TradingView, you see all these little tabs up here. You can do 2, okay? You can do it this way. You can make 3 charts, okay? Or you can even make a whole bunch of charts. So as a matter of fact, that's what I have, I have it saved where if I load it right here, I have a daily set 1, daily set 2, and daily set 3, okay? You don't have to go through this extreme, but let's just say I want to look at daily set 2, right? If I take a look at daily set 2, I actually have 8 currency pairs right here, okay? And these are actually all marked up with all the major support and resistance zones. And some of them, I even have alerts on it, and so that I know when price is going to hit those areas, okay? So that's how you find your trades, and as a matter of fact, this is how the professionals do it, okay? And if you're just starting off, you know how I used to trade when I first started off? Well, I open up my computer and I say, okay, let me see here. I like GBP JPY, right? Let's see what that thing's doing now today, And then I look at this and I say, ooh, this is a bearish candle. Ooh, this is going down. I think I should just, let me see here. Yeah, I think I'm just gonna sell this thing, right? It's got to be going down, right? So that's how I started trading, right? Because you don't know any better. But the professionals, the way that they trade, they're proactive traders, not reactive traders. They don't react to the market. You are proactively telling the market when you want to trade it versus trading when you see something and you think that is good, okay? So by mapping things out ahead of time, just take some time out, maybe on a Sunday or a Monday or something like that. Actually, this doesn't take very long. It took me like 30 minutes to put all this together and to find some zones. And then I set my alerts, and then I'm done, okay? And then I just wait for price to get to the areas where I want to trade, and then that's when I take my trades, okay? All right, guys. So thank you for coming on to this webinar and to and listening to me. Hopefully you guys learned something. I'm gonna try and see if there's any questions here. Let me see here. Okay, hold on. I'm looking at your questions right now. Okay, hold on. Okay, all right, Don, you want to see how I set the alerts again? Okay. Um, how much do you pay for Pro? Okay. Yeah, you know what, I can't even remember. I paid, I think I paid for the year, and so um, I don't remember, but it's not that much. It's like it's less than $10 a month, I think. Okay. All right. Okay, what was the indicator you showed earlier? Okay, so okay, so let me answer Don's question first. Okay, so how do you set the alerts? Basically, you go ahead and draw your zone area. Okay, let's say this is my zone area right here to right here. Let's say this is the area that I want to short this thing. Then this line right here, this resistance line, is where you want to set the alerts. And it's pretty simple to do. All you got to do is put your mouse right over the line, make sure this dot appears. That way it knows that you want to do something with this line. And so you do a right click and you click on add alerts, which is right here. Okay, right click, add alert. It's going to bring this up, and then you click on create, and it comes up right here. Okay, and once when it has alerted you, it'll move down here. Okay, but that's it. And then remember to put in your phone number as a SMS email from your phone carrier, in which I showed you how to do already from right here. Remember? Okay, remember to put that in there so that when they send you the message, it actually comes to your phone as a text. Okay, because you know we don't look at emails all day, but we have our phones on us all day. So when you get the text, then you know that, oh, price is hitting my area. I better go check it out and see if I want to place that trade. And sometimes, you know, if news affected it and it just shot right past your area, then you should rethink that and maybe don't take the trade. Okay, so you know there's a couple factors involved, but you know, as I showed you, as a matter of fact, let me go back to odd USD. That's odd USD. This is a very recent one, okay, that actually price is already actually hitting right now, okay? And so quite honestly, this is not a signal, but I'm telling you guys, this is probably a trade that I'm gonna take, okay? So this would be a buy right here, okay? It's hitting the zone, it's here. And this is a very bullish trend. You take a look at that, right? Okay, it's a good area. Look at these right, these touches right here. Okay, price already hit it once. It bounced back up. It's coming back down to retest. Take the trade. Okay, so that's it. Let me see anything else. Oh, somebody wanted to know about that indicator. So the indicator earlier, this is just a MACD, and what I do with the MACD is I just move that little line in the middle, and I just like to keep it basic like this. I really don't even use this. I really just use this to spot divergence, and you know, and pretty much that's it. I just spot divergence with this. Let me go to the ADX one. I use the ADX trend strength leaf West style by J. Okay, ADX trend strength leaf by J. So what this just does is that it just shows me the trend, or shows me the trend strength. The bigger the histogram, the more it's trending. Okay. Oops, sorry. Okay. So And you don't, and again, you want to pay attention to the 4-hour chart trend and the day chart trend, okay? So if we take a look at the 4-hour chart trend, you see this right here? It is trending bullish and it's trending pretty heavily, okay? See how heavy, how high that histogram is? All right. So you don't want to try and go short on this thing, okay? You want to just wait for price to come back down to an area of support and then map out a zone and buy it. So again, this is where it's at right now. So that's that. Okay. Is it the one? Okay, how do you know what fib retracement price will be falling or rising to? Well, you don't know. But just typically, whenever price retraces, it usually hits the 61%. Okay, and it just kind of depends, but that's usually what I use whenever I look for the area of reversal. So again, like I showed you guys earlier, price comes down here, right? It comes back up, and let's say price has already reached up here. You're like, you know what? Should I take the trade? Because now you're not close to a support and you're far from resistance. So you don't really want to buy it right here because it could like go the other way, right? Just as what it's doing right now. But if you take a look right here, okay, 61% to the 79 area, it hit right here. Now it's going back up. Okay, so again, if you miss the opportunity to buy right here in this area, let's say for this candle is going up, you missed that opportunity to buy when you saw it, it's already way up here, then don't sweat it. Just wait for price to come back down. It's going to come retest when it gets to here, or you can even set a pending order right at this line right here, so that when the market comes in, it'll just hit your pending order and take you in. Okay, so that's depending on the trade you said you would probably take. It's trending up, but it is hitting a really high slope. How do you prevent against a reversal? Jimmy, I don't understand what you mean by high slope. It's hitting a very high slope. And well, you know what? Let me just say this: you don't really know. You have an indication, and you have you have an edge because you know that at certain areas, price is going to reverse, and all you can do is just trade your edge. Okay, so you gotta just learn support resistance once when you got that down, and that's all that you can do. I mean, we don't know, and it's not 100%, but overall, out of 10 trades, I win at least 8, right? And that's good enough for me. So if price is coming down here and it keeps on going, then well, that's a losing trade. So what? You just move on to another trade. But basically, it's important to set your stops. Okay. So you set your stop, and let's say I set my stop there. Let's say I set a take profit right there. Okay. And you just let the trade run. So you don't have to stare at it and say, come on, keep on going up or whatever. You set your stop, you set your take profit, and just let the trade run and come back and take a look at it after an hour. Okay, after 2 hours, and see where you're at. It might come back down here to this area, and then it'll go up. But this looks pretty good to me. Okay, I mean, there's a good trend line right here from the 4-hour chart. It's hitting this area zone with this nice support area too. You know, I like this. So let me see. Okay, a high point, but it is hitting a really high slope. How do you prevent against the reversal? Okay, so you mean it's hitting like a major high, right? Okay. If I go over to the 4-hour chart, so you got like right here, you got like some nice resistance areas up here, right here. Okay. Now, keep in mind that yes, you do have to be careful about these right here. Okay. Remember, I'm trading bullish, I'm buying to go up here, but I am not going to let it go over past this area, okay? Because I recognize that this is a pretty strong resistance area also, okay? So I'll probably take profit right in this area here, or perhaps I might even just take profit right here, okay? That's about, let me see how many pips you're going for here. You know, 18, 20 pips. There's 20 pips just to this area. You want to go up a little bit higher, maybe about 30, 28, maybe about 30 pips, okay? So just from right here to up here is about 30 pips. And, you know, if you're trading at a one standard lot contract, 30 pips, that's 300 bucks, right? So that's good enough. I mean, I know a guy who focuses on only trading 20 pips per day. Of course, he trades like 5 contracts, 5 standard lots, and 20 pips per day. Simple to do. 20 pips per day makes him $2,000 a day, and he's happy with that. And I'd be happy with that. Okay, so you know, you really don't have to like get hundreds of pips per day. Just focus on the important thing is being consistent. Okay, it's not so much about how much you make. Just be consistent on the amount of pips that you catch. Eventually, as your account grows, you can catch, you can trade higher lot sizes and make more money, okay? He said it's already gone so high. Oh, okay. So, you know, it has, yeah, it's gone pretty high, but you have to remember again that this is bullish, okay? And this right here is giving you an opportunity to buy it again because of this support area from the 4-hour chart, in which you can also see from the 15-minute chart here. It's hitting all these areas too, okay? And again, you got the confirmations that these are, you know, oops, sorry, I keep on moving this thing. That's why that alarm rings. So see, my phone's ringing already. Okay, so how do you know when it won't start crashing down? Well, once when it hits up here, then you got to be careful, of course. You know, it might just crash down once when it comes back up here. But right here, I'm not worried because of this support, okay? Or even if it passes this support, you know, I got this support down here, you know? And so, you know, I could set my stop right down here. If price holds at the 61, where would you think it will extend to also? Is that a double bottom that we're seeing on support? I guess you can consider this a double bottom. It's not like actually all the way down here where it levels off as a real double bottom, but you know, this is coming back down to retest. And so as you can see, you see that bullish candle, it's already coming back up. So, you know, again, if you took the trade, then I think this will work out. But again, this is not a signal. I'm just saying. All right, guys. So if no more questions, then I'm going to wrap this up. Hopefully I was able to answer all of your questions and help you guys out. And Yeah, and Jimmy, there's more training inside of IML, and we actually have a London session where a guy named Christopher Derrick, he trains like every night and well, practically every night, but he's really good at charting, and so he's the best. He's really good, so you can learn from him. What I do is I add on to what he trains, and so a lot of people, they don't talk about, they don't tell you how to trade or like how to set up your trading day, you know. And so for a lot of new people, like how I was, I thought that okay, you had to sit by the computer and then you had to like just pull up each charts one by one and then look to see what price is and see if you could find a trade. And that's really not how you do it. You actually map out areas ahead of time and then wait for price to get there and then you make the trade. Okay. All right, guys. So yeah, you're welcome. You're welcome, Ty. You're welcome, Yi. All right, guys. So I will see you guys inside of the Facebook group sometime. And if you guys have any other questions, you can go ahead and message me on Facebook or something. And let's rock and roll. Let's change our lives and let's change the lives of many other people out there. Okay. All right. Take care.